Good day. I'm Michael Bender from the Center for Fiscal Equity. This is a video to go with our comments to the Senate Finance Committee on examining charitable giving and trends in the nonprofit sector. Much of this we've talked about before the Oversight Committee of Ways and Means. This Congress on equality, and the prior Congress we had drafted but not submitted comments because the hearing was canceled on the same topic as today, taxing the nonprofit sector and what the TCJA, those problems. So Mr. Lewis never got back to the hearing, but here's the testimony. There are two questions for taxation of charitable contributions. The first is where the money comes from. The second is how the outgo should be taxed. Under our proposed asset value added tax, assets would be marked to market at initial public offering, option exercise, and the first sale after inheritance, gift, and donation, which is the important point here. When assets are donated to charities and nonprofits, no tax will be paid. When these institutions sell their assets, taxes will be collected in full. Whether endowment income is taxed is an open question, although usually the asset value added tax would be levied if it was a normal individual. Sales to employee owned or cooperative firms will be zero rated, just as they are now when a single owner sells out to an ESOP when they're transitioning out, or it's called succession planning. We propose expanding this privilege to all asset sales. Note that as long as a business or family farm is kept in the family or sold to a cooperative, no tax is levied. Large religious organizations, charities, and nonprofits have become big businesses and need to be taxed accordingly where appropriate. Some are legally held as the property of the minister or bishop. Taxing such entities as sole proprietorships makes sense. While this could be seen as targeting certain religious organizations, such as the Catholic or the Episcopalians, their choice of organizational form is not the fault of the public or the Congress. As such, their tax treatment must match similar business classes. Charities that have commercial operations will be subject to an invoice value-added tax, as they are essentially are under the TCJA provisions in question, like any other commercial company, particularly if these operations compete with Type C, Type S, partnership or sole proprietor firms that pay individual taxes at pass-through rates. The invoice VAT will be collected on commercial goods. This is essential after reform to provide visibility to their customers, as taxes imposed by the entire supply chain and the commercial vendor or independent agent must pay an invoice VAT. In other words, if people sell insurance to a broker, they will pay the invoice VAT, and then the broker would charge an invoice VAT when they sell the policy. For instance, if AARP or somebody else used an agent. Without such treatment, every business into some charitable organization overnight, and this would be not advisable. Fiscal conservatism should not be synonymous with empowering tax evasion schemes. Whether non-commercial operations are subject to an invoice VAT depends upon the extent they are used to fund entitlement spending and payroll taxes versus discretionary spending, government spending. For example, if Social Security or Medicare were to become invoice VAT funded, thus becoming zero rated at the border, replacing the payroll tax rate at the border and replacing the payroll tax, then charitable organizations must continue to fund these operations, as they will benefit the employees of these organizations, these taxes, I mean. If, however, entitlement services are funded through our proposed subtraction VAT or SVAT, then there is an argument to leave the non-commercial activities of these entities VAT exempt. By VAT, I mean invoice VAT. Political organizations and committees also would pay subtraction VATs on their payroll, and their purchases would not be invoice VAT exempt in the long run. Committees that give little to candidates should not be tax exempt, as they are essentially corporations whose high salaries are essentially partnership income in disguise without the corresponding risk. As such, they should be taxed at pass-through rates. If a subtraction VAT is enacted, ads through deductions for all individuals would be eliminated. Charitable organization employees will continue to tap the employee to pay the employer contribution to old age and survivors insurance, assuming it is not subsumed into our proposed subtraction VAT. That all depends if it's an invoice VAT or subtraction VAT. Who's, whether the society pays for it or the company pays for it, for a portion or all of Social Security employer contributions. We're talking private accounts, by the way, which we should not, which progressives should not shy away from if the account purchases ownership in the company. Charitable organizations will pay the subtraction VAT because the employees will benefit from the programs funded by this levy or offsets to it. For example, Catholic Charities employees might designate the Catholic school system as an alternate provider to public schools, which would allow Catholic Charities to take credit on this levy to otherwise be paid against their value added. This is at the state level. Likewise, employees would be paid the same child tax credit as commercial employees, again as an offset to their subtraction VAT levies. Health and higher education credits proposed for other enterprises would also be available to charitable organizations, as well as other applicable credits. Health would be federal, and higher education could be federal, but it might also be state. Note that because certain payroll and personal income taxes will be eliminated, the gross pay of charitable employees will decline in like manner to those of their commercial counterparts once tax reform is enacted. In other words, employees will be treated the same no matter who their employer is. Finally, this scheme is applicable to governmental organizations as it is to charitable organizations, with modifications. State governments would be paying the federal subtraction VAT, while federal organizations would pay the state subtraction VAT, both on the same basis relating to value added through payroll. These organizations would not pay the subtraction VAT to themselves. However, their personnel systems should create a similar range of benefits. This schema provides a better explanation of how a fair tax might work at these levels, while also providing a rationale for adjusting government employee salaries and providing for non-governmental performance of services through the same time of alternate subtraction VAT. So, the usual analysis of the fair tax assumes, or rather, a VAT assume a lot of the same conditions as the fair tax. There's just so many ways to do it when you shift from consumption, from personnel, from individual taxes to some kind of consumption tax. So again, thank you for your time. I will be sending an amended version of my comments because I saw some mistakes that are very old and transferred along. So I apologize for having to resend it, but it will come with the link to this video. Again, have a pleasant day. One of these times, you're going to have to see me in person. I don't have to wear pants. So again, thank you. Bye-bye.